Hello, this is Patrick White from AA Commodities and Investments with your Monday, August 19th market recap video. As you can see here, we had a mostly lower day in the markets here. We had December corn down 6 1/4 cents at 374.5. November soybeans were down 13 1/4 at 866.5. And December Chicago wheat was down 5 at 472.5. Before I get started here, I'm going to start it off with a disclaimer. Just remember that everything I say here is just my opinion and that there's no direct trade recommendations. If you'd like to read the full disclaimer, please pause the video now. All right, so as you can see here, we're lower across the board, and really, it's just because of the rainfall we had over the weekend here. We had some pretty favorable rainfall between, Saturday, Sunday, and into Monday for most of the Midwest there. We had about 1 to 2 inches of rain in the eastern half of Iowa, which was pretty good, considering that a lot of that area was abnormally dry there, and even into Illinois and things too. So I think, going into Friday, there's a lot of concern over the dryness going into the weekend. However, the rains kind of tempered those fears there. And if you look at the 6 to 10 day forecast, we're forecasted for normal to slightly above normal temperatures in the 6 to 10 day. And then, extended rainfall here, above average rainfall here for the 6 to 10 day. And if you look at the 8 to 14 day, we're trending just a little bit cooler for the 8 to 14 day forecast and a little bit above normal for precip. So overall, I don't think there's going to be a huge concern over the drought, going forward. With that being said, I think all eyes are going to kind of shift on this, this cooler forecast as well, just to see, what time of the year the frosts come in and just how much damage there could be. This year with the later crop, there is increased risk of damage, but I think that, no matter what, there's, just very few instances of an early frost happening. So definitely kind of a wait and see there. Certainly didn't matter in the markets today. We had corn down, 6 early on here. We had, a gap down on the overnight here. I'll get it into the corn chart here. We ended up down 6 1/4 on the day. We didn't take out Friday's high or Friday's low. We had an inside day. Looking at the corn market here, we gapped down on the overnight, just kind of chopped here for the rest of the day. So I guess I had some near-term support pegged in there, like the 374 mark, 374.5 or so. We ended up holding that today. We ended up closing right at 374 3/4. So we definitely tested down there. What the longs don't want to see is a close below the 370 mark in December corn. If we close below that, we're probably headed down to this 363 3/4 contract low, and that takes out the May 13th contract low there. So what we don't want to see is close below 370 down into there. With that being said, though, where we can potentially rally to, I would say, we found some interim resistance at 381. 387 would be another area, and that's the high from this gap down. And then the 392 3/4, that's what it would take. 392 3/4 to 393 to close that gap. So I'm guessing there's a lot of eyes on that gap level in the corn market there, and that's definitely a potential target. So on November soybeans here, really just benefited from the rainfall over the weekend here and traded lower from out of the gate. We opened up about, down about 5 cents here on the overnight. And the market really just on Friday rallied on the dry weather all the way up to 880. They tested 880 about 3 times there. I'll get a 15-minute chart up there. But yeah, they tested 880 over here 1, 2, and then 3 times. Still couldn't get a close above it to close the week out, and then gapped lower on the overnight and then traded lower today. They kind of did the same thing with the 875 level today, where they hit 875 3 to 4 different times and couldn't get above it there, and then slid into the 11 o'clock hour there. So. With that being said, definitely the trend is still lower for the soybean market. We're into this kind of, 863 to 861 support area in there. I think that's probably where we're going to head to and chop around and see where we go from there. But, I think that just soybeans with the better weather and stuff, we're just going to be testing lower. So, along kind of the same fronts there, we have the December wheat contract, December Chicago wheat. Talked about this in the Sunday night video, but 470 has been pretty good support area for the December wheat contract, and if you look back as well, 470 over here was a solid resistance area, going into April and May. So with that being said, if we lose 470, that's going to be really technically damaging for the chart. We could slide down to probably the low 460s, if not 459 there. That would be the next area. So 470 is definitely the area to watch in December Chicago wheat. Let's see what else is moving today. We had we had cotton. That's been trying to get these cotton contracts been trying to get above the $60 mark. Got a close above there on Friday with a nice close towards the highs, but reversing that today. So we're still in the range between $60 and 58, call it 57.75. We're still within that range there, and the weather is still dry for the Panhandle of Texas, but buyers just aren't taking it yet. So with that being said, we had October hogs here. Taking a look at this chart, we were in a sustained range here last week until we broke out of that on Friday. We had a limit lower day in October hogs on Friday. We ended up rallying right back to that 64.50 resistance level. And that corresponds with these lows here that were made on the 6th and the 13th there. So since we broke out of that range, the traders tried to get back into it today and couldn't get the job done. They ended up having the high at 64.47. I've got resistance pegged at 64.50. So I think that range is going to be between 64.50 and 61.50, the low of this candle here on the 5th. In between that $3 range here until we know more. If we do pop back above into this range, I would expect us to test up to 68.50, but not showing us that they're going to do that at this time. And the higher action today was on the news that the Philippines got the African swine fever, and they had some hogs dying over there. So something to certainly keep an eye on here. And then in October live cattle, again gapped up, tested higher, closed lower. Kind of just a little bit of a deja vu deal there. I mean, we're between this range between basically $98 and 100 to 101. The market still doesn't really know what to do about the whole Tyson fire deal. I guess the initial shock certainly is over. We're not selling off, with near the brute force that we were before. But with that being said, the situation is certainly not bullish. So we've seen cash prices depressed. Box beef has been really high. So packers are certainly incentivized. They're making about between $350 to $500 an animal. So I've heard. So they're certainly incentivized to slaughter as many cattle as they can. So that's why you haven't seen slaughter numbers down, drastically. It's certainly not the Armageddon that people thought it would be. But yeah, with that being said, this has yet to turn around. I think, hopefully we can hold the $98 mark in here. If we can't, we'll probably slide down to 96. I guess as far as the recovery, we're probably not going to be in recovery mode until we can take out this 101 level. Then I would expect it to go up to 103.42. So that's about all I got here. If you guys have any questions, feel free to give me a call at 712-262-7606 or go ahead and visit us at aa-commodities.com. Thanks for watching. Appreciate it.